Ever since Chatgpt burst onto the scene, the way we seek knowledge has quietly but profoundly shifted. Friends mention it offhand, and I've felt it myself. Fewer Google searches, more conversations with AI. It feels faster, more intuitive, more human. Yet, that was just a hunch, until a cold, hard revelation came from the very top. During a high-stakes antitrust hearing in May 2025, Apple's Senior Vice President of Services, Eddie Q, delivered a jarring statistic. For the first time in over 20 years, Google searches through Safari, ever since Safari defaulted to Google, declined. That has never happened in 22 years, he testified. That single sentence reverberated across the tech world. Wall Street reacted immediately. Alphabet's stock plunged more than 7% in a day, erasing billions in market value almost overnight. Analysts pointed to rising preference for AI platforms like Chatgpt, Perplexity, and Claude, suggesting that traditional search engines were suddenly facing genuine competition. The question on everyone's mind: could Google's dominance be slipping? Then something unexpected happened. Alphabet began to recover. The stock steadied and has since rallied back, hovering near its historical highs. The company's latest earnings report doesn't reflect decline. It shows resilience and growth. In Q2 2025, Alphabet generated $96.4 billion in total revenue, a robust 14% year-over-year increase. More strikingly, Google search revenue alone jumped 12% to about $54.2 billion, setting a new record. This contradicts the narrative that users are abandoning Google for AI alternatives. So now we face the deeper, more nuanced question: is the threat from ChatGPT and other AI platforms real, or is Google's ecosystem simply evolving and adapting? Hi, my name is Freeman. I'm an independent investor with a strong interest in U.S. tech stocks, as well as listed equities in Hong Kong and Singapore. For many years, Alphabet has been one of my core holdings. I've always seen it as a safe, long-term investment, a company with almost irreplaceable dominance in search, exceptionally strong earnings and cash flow, and rock-solid financial health. But then came the launch of ChatGPT and a wave of other advanced AI models. These AI tools are getting more powerful, more integrated into our lives, and that raises an important question: how real is the threat of these AIs to Alphabet's business? Before we dive in, a quick disclaimer. This video is for informational purposes only and does not constitute financial advice. It is not a buy or sell recommendation for any stock or asset. Always do your own research or consult with a licensed financial advisor before making any investment decisions. Before we evaluate the threat posed by AI chat tools like ChatGPT, it's essential to understand just how integral Google Search is, not just financially, but strategically to Alphabet's entire empire. In 2024, Google Search and its related search advertising brought in approximately $198 billion, representing around 56.6% of the company's overall revenue. Analysts estimate that Search's share of Alphabet's total revenue remains firmly above 50%, with full-year search revenues for 2025 projected to reach as high as $215 to $225 billion. Put simply, more than half of Alphabet's revenue is still driven directly by Google Search. That makes any disruption to search deeply consequential for Alphabet's bottom line. Google Search isn't merely a profit center. It's the central nervous system of Alphabet's entire ecosystem. It channels user data into every Alphabet service, from YouTube and Gmail to Maps, powering personalization, ad targeting, and product development. For instance, YouTube advertising relies heavily on insights derived from Google Search. Without this data engine, Alphabet's ability to maintain high engagement across Android, Chrome, Maps, and YouTube, and to monetize that attention, would be significantly weakened. If AI platforms like ChatGPT begin to siphon off search behavior, it doesn't just reduce ad clicks, it undermines Alphabet's ability to learn from users, serve relevant ads, and sustain its sprawling digital ecosystem. That's why the question, how real is the AI threat, isn't just about short-term earnings. It's about the structural foundation of Alphabet's business for years to come. Ever since ChatGPT went viral, one question has dominated headlines. Is this the end of Google Search as we know it? Are users abandoning Google and flocking to AI chatbots for answers? The truth, ChatGPT is eating into Google's informational queries, but the heart of Google's business remains untouched. Let me explain. Google search still rules the internet. Google processes over 8.5 billion searches every single day. Even if some heavy users are switching to Chatgpt for answers, global demand for search continues to grow, driven by millions of new users coming online in emerging markets. So yes, individuals may Google less, but the total search pie is still expanding. Chatgpt doesn't threaten the money engine. Most Chatgpt queries are for summaries, explanations, or coding help, useful, but hard to monetize. Google's cache machine is powered by commercial intent searches like best running shoes, cheap flight to Tokyo, insurance quote. These are high-value searches with clear buying intent, and advertisers pay top dollar for those clicks. That's where the billions come from, not from questions like, what's the capital of France? Google is making more money per search. Even if search query growth slows, Google is extracting more revenue from each search. This is driven by more ad slots at the top, ads deliberately designed to resemble organic results, and AI-powered targeting that improves click-through rates and advertiser confidence. In other words, fewer searches can still translate into higher revenue. Local and mobile searches are exploding. People constantly search, restaurants near me, gas station open now, best dentist in my neighborhood. These location-based queries are gold for advertisers, and Google dominates this space. Can Chatgpt replace that? Not even close. Advertisers won't leave Google. Google owns an ecosystem. Ads, YouTube, Maps, shopping, all connected. Advertisers stay because Google delivers ROI like no one else. Even if traffic shifts slightly, budgets remain sticky. Here's the irony. AI still needs Google lists. Most AI chatbots, including Chatgpt, still rely on web search data for fresh information. In many cases, AI models are pulling data from the same internet Google indexes, sometimes even via Google search APIs. So, for now, AI isn't killing Google. It's still leaning on it. So, the bottom line is, Chatgpt is eating into informational queries, but Google's real power, transactional searches and ad monetization, is stronger than ever. The battle isn't over, but Google is far from losing the war. If you're an investor in Alphabet, you might be wondering, when should we really start worrying about Chatgpt and other AI models? While today Google search remains the default gateway to the internet, there are subtle signs that could indicate a major shift ahead. Let's break them down. Location integration, the first big signal. Right now, Chatgpt doesn't know your real-time location. It can't tell you the best pizza near your office or the nearest open gas station. Google, on the other hand, dominates these local searches, and these are among the most valuable ad slots in the entire digital ecosystem. But imagine this. Chatgpt suddenly starts offering hyperlocal recommendations without you typing your address. That means it has access to your location data, possibly through an app or OS-level integration. If that happens, a core pillar of Google's ad revenue, local intent searches, could start crumbling. Advertisers start migrating to AI. At the end of the day, ad dollars follow attention. Right now, advertisers are still spending heavily on Google Ads because that's where people search when they're ready to buy. But watch for this early sign. Brands start testing ad placements inside AI chats. Imagine sponsored responses, featured recommendations, or even conversational ads inside Chatgpt. If OpenAI or any AI platform can show strong ROI for advertisers, those budgets will shift. And once ad money moves, the market narrative changes quickly. The default assistant shift. Google's greatest moat in search isn't just technology, it's distribution. Google is the default search engine on billions of devices. But what happens if Apple, Samsung, or Microsoft changes that? Picture this. Apple partners with OpenAI, and suddenly Siri runs on Chatgpt. That would reroute billions of queries away from Google instantly, without users even making a conscious choice. If that deal ever happens, it's game-changing. Commerce and transactions go conversational. Right now, Chatgpt can give you great answers, but it can't seamlessly book your flight or order your dinner, at least not natively. Google thrives on these high-intent, monetizable searches, but the day Chatgpt says, "I've found you the cheapest flight to Tokyo, shall I book it now?" and completes the transaction in chat, that's when Google's moat starts collapsing. These are the searches that drive massive ad spend, and if AI takes them, Google bleeds. Deep personalization takes over. Google's edge has always been its data advantage. It knows your search history, your emails, your YouTube habits. ChatGPT doesn't. Yet, the turning point will come when AI assistants start pulling in personal context. Your calendar, your preferences, your past purchases. Imagine an AI that knows what you like to eat, when you travel, and your favorite brands. That's a level of personalization beyond what Google offers today. If this happens, advertisers will follow because the AI becomes the primary interface for your digital life. None of these 5 signals are fully materialized yet. Google's core business remains strong, even growing. But if we see 2 or 3 of these early warnings start to hit, Alphabet's dominance in search will face the most serious challenge in its history. Google isn't sitting idle while ChatGPT threatens its core business. Alphabet has gone into full defensive mode, rolling out countermeasures and doubling down on its strengths. Here's how Google is fighting to protect its search empire. Launching Gemini as its AI weapon. When ChatGPT exploded in popularity, Google responded by unleashing Bard, later rebranded as Gemini, its most advanced AI model. But this isn't just a chatbot. Google's strategy is to embed Gemini deeply across its products, from search to Gmail, Docs, and Sheets, so users experience AI without ever leaving the Google ecosystem. Reinventing search with SGE Overview. Google knows search behavior is changing, so it's testing the Search Generative Experience, SGE Overview, AI-powered summaries that appear at the top of search results pages. Instead of blue links, users get AI-curated answers directly in Google Search. This is Google's way of saying, you want ChatGPT-style answers? You'll get them here, and stay here. Defending its distribution moat, which, however, is under antitrust fire. Google's strongest defense has always been its distribution dominance. It pays billions every year to remain the default search engine on Apple's Safari, Android devices, and Chrome. This ensures that when people open a browser or a new phone, Google Search greets them first, not ChatGPT. But this advantage is now under siege. The ongoing U.S. antitrust trial revealed Google spends an estimated $18 to $20 billion annually on these default agreements. Regulators argue these deals block competition and could soon restrict or ban them. If that happens, Google's biggest moat could vanish overnight, giving AI challengers like ChatGPT or Bing a fair shot at stealing market share. Doubling down on AI investment. Alphabet is one of the largest AI investors on the planet. Beyond Gemini, Google owns DeepMind, a leader in cutting-edge AI research, and is spending billions on AI infrastructure to train even more powerful models. CEO Sundar Pichai has been clear. AI will be natively integrated into Google's core products, ensuring Google doesn't fall behind in the AI arms race. Reinventing ads with AI. Advertising is Google's lifeblood, and it's not giving that up easily. The company is rolling out AI-powered ad solutions that automatically generate ad copy, optimize targeting, and predict buying intent with greater accuracy. Even if search behavior shifts toward AI, Google wants advertisers to keep their budgets flowing through its ecosystem. Leveraging the power of the Google ecosystem. Alphabet's biggest strength is its ecosystem. From YouTube to Maps, Gmail, and Android, Google controls multiple platforms people can't live without. By injecting AI into these services, personalized recommendations on YouTube, AI summaries in Gmail, predictive routes in Maps, Google makes it harder for users to leave. OpenAI doesn't have that level of integration, at least not yet. The bottom line is, Alphabet isn't going down without a fight. It's deploying AI at scale, fortifying its distribution, and weaponizing its ecosystem. But cracks are forming. Antitrust pressure, changing user habits, and the rise of AI-first platforms mean the battle for the future of search is far from over. From my perspective as a long-term investor in Alphabet, there is no immediate sign of disruption. The company still dominates search, advertising, and its broader ecosystem. However, the moat isn't what it was 3 years ago, before AI became a mainstream force. I believe Alphabet can maintain dominance for at least the next 2 years, thanks to its vast ecosystem and entrenched advertiser trust. Beyond that, the picture becomes far more uncertain. The rise of AI, especially tools like ChatGPT, may force Alphabet to invest massive amounts of capital just to defend its position. Whether that level of investment is sustainable over the long term remains an open question. As a result, I now view Alphabet as a moderate risk investment, rather than low risk, and the risk could escalate further if one or two early warning signs we discussed start materializing. As an investor, my strategy is vigilance. I will be closely monitoring the early warning signs we discussed: location-based queries, advertiser experimentation, changes in default search positioning, AI integration into commerce, and deep AI personalization. Given the company's multi-year run-up and my heavily weighted position, I am gradually trimming down my holdings to a more moderate level. This allows me to lock in gains while remaining exposed to Alphabet's near-term strengths without overcommitting in an increasingly uncertain environment. For those who haven't yet positioned in Alphabet, the company could still be a relatively safe medium-term investment. Its current valuation remains fairly priced compared to other members of the Magnificent Seven, even after the multi-year run-up. Earnings continue to be extraordinary, supported by strong cash flow and a vast ecosystem that consistently generates revenue. That said, vigilance is essential. Alphabet is likely to maintain dominance over the next 2 years, but the AI landscape is evolving rapidly. If you plan to invest a significant amount, watch for early warning signs of disruption, particularly changes in user behavior, advertiser adoption of AI, and shifts in default search channels. Staying proactive allows you to capture gains while managing risk, in a world where Google's competitive moat is no longer as unassailable as it once was. In summary, Google Search remains strong. Despite Chatgpt changing user behavior, Google Search revenue continues to grow. Chatgpt mainly handles informational queries, not high-value commercial searches. Growth is supported by emerging market users, local searches, higher ad rates, and a trusted ecosystem. Early warning signs. Investors should monitor subtle signals: AI gaining location access, advertiser adoption, becoming the default search, integrating commerce, and offering personalized experiences. Alphabet's defense: Google is fighting back with Gemini, SGE overview, deep AI integration, strengthened ad tools, and leveraging its ecosystem, though antitrust concerns limit some defensive levers. Investor takeaways. For current investors, there is no immediate disruption, but the moat is narrower. Consider moderating exposure. Risk is now moderate and could escalate further if one or two warning signs materialize. For new investors, Alphabet remains a moderately safe medium-term bet, but stay vigilant for signs of disruption. Again, this content is for informational purposes only. It is not financial advice and should not be considered a buy or sell recommendation for any stock or asset. Always do your own research or consult a licensed financial advisor before making investment decisions. Thanks for watching, and have a great day.